What's up, future homeowners? I know what you're thinking. Great, another real estate agent trying to sell me something. But hold up. I'm actually here to save you from making the same mistakes I see first time buyers make every single week. Look, buying your first home is like trying to assemble IKEA furniture. It looks simple in the pictures, but somehow you end up with extra screws and questioning your life choices. The good news, I've been doing this for years. I'm a certified residential specialist with Real Broker, and I've seen every possible way this can go wrong. And right. So grab your favorite beverage, hit that subscribe button. Seriously, it helps me more than you know. And let's dive into the 5 things that'll keep you from becoming one of those horror stories people share at dinner parties.
So, like I was saying, you just take a right out of here, and then just about a quarter mile down the road is the expressway.
All right, let's start with the big one, figuring out what you can actually afford. And here's where I'm going to blow your mind. Just because your bank says you can afford a $500,000 house doesn't mean you should buy a $500,000 house. I know, it's crazy, right?
No way.
Banks are like that one friend who encourages you to order dessert when you're already full. They mean well, but they're not the ones dealing with the consequences later. They look at your income and think, hey, this person makes great money. But they don't know that you have a serious coffee addiction that costs you $200 a month, or you're planning to adopt 3 rescue dogs next year. Here's the real talk. Your total housing cost should be around 28% of your gross monthly income. That includes your mortgage, property taxes, insurance, and if you put down less than 20%, PMI, which stands for please more insurance, because apparently regular insurance wasn't expensive enough. But wait, there's more. You also need to budget for the fact that houses are basically expensive pets that require constant care. Set aside 1 to 3% of your home's value each year for maintenance. On a $300,000 home, that's $3,000 to $9,000 annually. Yes, annually. I know, I'm a lot of fun at parties.
Hello.
I've seen too many people become what I call house poor. They can afford the mortgage, but they're eating cereal for dinner because they spent all their money on a house. Don't be that person. Your future self will thank you when you can still afford to go out for pizza. Okay, thing number 2, getting your finances ready isn't something you do the weekend before you start house hunting. It's like training for a marathon. Except instead of running, you're organizing paperwork and crying over your credit score. Let's talk about the holy trinity of home buying: your credit score, your down payment, and your emergency fund. Think of them as the 3-legged stool that keeps you from falling flat on your face. First up, your credit score, that magical 3-digit number that somehow determines your entire financial future. It's like your GPA, but for adults, and way more stressful. The difference between a 620 and a 740 credit score can cost you over $100 a month on a $300,000 mortgage. That's like paying for a gym membership you'll never use, except forever. Get your free credit reports. Yes, they're actually free, despite what those commercials with the catchy jingles tell you. Look for errors, because apparently credit bureaus make mistakes more often than my GPS. Pay your bills on time, keep your credit card balances low, and whatever you do, don't go on a shopping spree right before applying for a mortgage. I don't care how good that sale at Target is. Next, your down payment. While you can put down as little as 3% on some loans, which is great news for your savings account, having more gives you better options and makes you look like a serious buyer instead of somebody just window shopping. But here's the plot twist. Don't empty your entire savings account for the down payment. You'll also need money for closing costs, which are like surprise fees at a concert. Except instead of overpriced water, you're paying for things like title insurance and attorney fees. Plus, you'll need moving money, because apparently moving trucks don't run on good intentions. And please keep an emergency fund. Homeownership is full of surprises, and not the good kind. The water heater will die on the coldest day of the year, guaranteed. It's like Murphy's Law, but for houses. Thing number 3, understanding that the purchase price is just the beginning. Houses are like expensive teenagers. The initial cost is nothing compared to what they're going to cost you over time. Beyond your mortgage payment, you've got property taxes, which vary more than the weather and are about as predictable. You've got homeowners insurance, and depending on where you live, you might need flood insurance, earthquake insurance, or acts of God insurance, because even divine intervention has a deductible. If you put down less than 20%, you'll pay PMI, which can add $100 to $300 or more to your monthly payment. It's like paying to rent your own house, which is as ridiculous as it sounds. And don't get me started on HOA fees. That's where your neighbors get to tell you what color you can paint your front door and charge you for the privilege. But wait, there's more. Utilities might be higher than your apartment. Turns out heating and cooling a whole house costs more than a studio apartment. Who knew? You've got maintenance, repairs, landscaping, and all those little things that add up faster than calories during the holidays. I recommend budgeting an extra $200 to $500 per month on top of your mortgage for these ongoing costs. I know it sounds like a lot, but it's better to be prepared than to be that person posting on social media about how adulting is hard while eating ramen for a third night in a row. And closing costs. Oh boy! These are like the hidden fees at a resort, except instead of paying $20 for a bottle of water, you're paying thousands for things with names like loan origination fees and title searches. It's like paying for a VIP experience, except the VIP stands for very irritating payments. Thing number 4 is my personal favorite. There are actually programs designed to help first-time homebuyers, and most people have no idea they exist. It's like finding out there's been a $20 bill in your old jean pocket this whole time. First, let's define first-time homebuyer, because the government loves technicalities. It usually means you haven't owned a home in the past 3 years. So even if you've owned a home before, you still might qualify. It's like getting a do-over, but for real estate. At the federal level, you've got FHA loans, 3.5% down, and they're more forgiving about your credit than your grandmother. VA loans for veterans offer 0 down because serving your country comes with some pretty sweet perks. And USDA loans for rural areas also offer 0 down because the government really wants you to live where the cows are. But here's where it gets really interesting. State and local programs. Almost every state has some form of first-time buyer assistance. It's like a secret menu at your favorite restaurant, except instead of a hidden burger, you get help buying a house. Some states offer down payment assistance loans that are forgiven if you stay in the house for a certain number of years. It's like getting paid not to move, which honestly sounds like my ideal job. Others offer grants. That's literally free money you don't have to pay back. I know, it sounds too good to be true, but it's real.
This is too good to be true.
There's also the Home Path Ready Buyer program from Fannie Mae, which gives you up to 3% of the purchase price toward closing costs after you complete a home buyer education course. It's like a discount for doing homework, except the homework actually helped you. And if you're a teacher, firefighter, police officer, or EMT, check out the Good Neighbor Next Door program. It offers significant discounts because being a hero comes with housing benefits. Who knew? The key is to research what's available in your area before you start shopping. Many of these programs have limited funding and operate on a first-come, first-served basis. It's like Black Friday, but for responsible adults. Thing number 5, choosing the right real estate agent is crucial, and it's a lot like online dating. You want someone who's attractive, professionally speaking, has good reviews, and won't ghost you when things get complicated. Not all agents are created equal, and you want someone who specializes in working with first-time buyers. Look with agents with designations like CRS, that's me, or ABR. It's like choosing a doctor. You want someone with the right credentials, not just somebody who watched a lot of medical dramas. Here are the questions you should ask any agent you're considering. And yes, you should interview multiple agents. It's not rude, it's smart. Ask, how many first-time buyers have you worked with recently? Can you provide references? And how will you communicate with me? Because if they can't answer a simple text, how are they going to negotiate your biggest purchase? A good buyer's agent should be like a really knowledgeable friend who also happens to have access to all the houses. They should educate you throughout the process, not just unlock doors and say, this is the kitchen, like you can't figure that out for yourself. Your agent should also be available when you need them. In today's market, you might need to see a house the same day it becomes available, or submit an offer faster than you can decide what to watch on Netflix. If your agent takes 3 days to return phone calls, find a new agent. And here's something many first-time buyers don't realize. In most cases, the buyer's agent commission is paid by the seller. So having representation doesn't cost you extra. It's like getting a free upgrade to first class, except instead of extra legroom, you get someone to handle all the paperwork. Remember, you're not just hiring someone to unlock doors. You're hiring an advocate, a negotiator, and someone who knows the difference between a good deal and a money pit. Choose wisely, because this person will either be your hero or the reason you need therapy. So there you have it, the 5 things every first-time home buyer needs to know. Don't let your bank be your financial advisor. Prepare like you're training for a marathon. Understand that houses are expensive teenagers. Take advantage of free money programs and choose your agent like you're online dating, but with higher stakes. If you're ready to start your home buying journey and you're in my area, I'd love to help. I promise I'm more fun than this video makes me seem. And I actually know what I'm doing. As a certified residential specialist with Real Broker, I specialize in helping first-time buyers navigate this process without losing their minds or their life savings. And if you're not in my area, I can put you in touch with a CRS wherever you are. You can reach me here, or you can check out my website. I offer free buyer consultations where we'll figure out your specific situation and create a game plan that doesn't involve selling a kidney. If this video helped you feel slightly less terrified about buying a home, give it a thumbs up. Subscribe for more real estate content that won't put you to sleep, and drop a comment below. I read every single one, and I love answering questions. It makes me feel useful. Thanks for watching, and remember, buying a home doesn't have to be scarier than watching a horror movie. With the right preparation and the right team, you'll be holding those keys before you know it. I'll see you in the next video.